everyone, and welcome to Your Broker Admin, where we share relevant updates, experiences, and ideas that help you deal with those everyday challenges. Whether you're in a support role or a solo broker newish to the industry, we're here to make your life that little bit easier. Episode 55 of Your Broker Admin is with us, the penultimate episode for 2025, which feels equal parts impressive and mildly alarming because somehow the year has inexplicably evaporated. But before we jump in, here's your weekly bonus history bite. On this day, December the 10th, in 1901, the very first Nobel Prizes were handed out in Stockholm. Physics, chemistry, medicine, literature and peace all got a look in. Banking and finance, a no-show. No surprises there. And in 1936, King Edward VIII abdicated the British throne to marry Wallis Simpson, proving that sometimes even the crown gets trumped by personal choice. Wouldn't happen today, though. Now, this week's Humpday Helper looks at the minimum requirements for credit analysis. Nothing groundbreaking, just the information you actually need up front so you don't spend the rest of the process untangling guesswork. And who needs that? Then we move into the loan reviews wrap-up, covering the week ending the 5th of December 2025. A steady start to the month, a few decent savings, and at least one client who walked away with an early Christmas present. I'm Rob Cummings. Thanks for tuning in, and let's get into some practical, non-prize winning detail that just might prove useful. In today's Humpday Helper number 162, I'm going to dive into my minimum requirements for credit analysis. Now, when it comes to completing the analysis on any loan application, I've always been of the opinion that the more I know about a borrower, the better I am at making an informed decision. This allows me to provide a solid recommendation, making the process smoother for everyone involved. Now, whilst I'm not specifically a lender these days, the principles hold true no matter where you sit in the process. Having the right information on hand is crucial. To make sure we're all on the same page, let's talk about the minimum amount of information that should be obtained up front to achieve that confident decision-making process. Beyond the obvious, a fully completed fact find, here's what I think is essential. ID documents. This is the basic verification step. You've got to know who you're dealing with. Get the client's names, ages, citizenship, the whole deal. As part of this, I find getting the Medicare card is really handy for verifying potential dependents. Credit checks. It's always better to know what you're dealing with up front. Better to find out early if there are any issues rather than getting blindsided later. For PAYG clients, you'll need reasonably current payslips, at least 2, I reckon, and anything else that may help validate their income and or deductions. It's all about making sure what income you have to use. For self-employed clients, get 2 years of financial statements, tax returns, and NOAs. This gives you the most accurate picture of their income and financial history. ABN and company searches. If you're dealing with more complex structures, make sure you're aware of ownership and where the income is being distributed. These can give you insights into the company's health. Trust deeds. If there's a trust involved, grab a copy of the trust deed. You don't need a certified version at this point, but it's essential for understanding the trust's structure and income distributions. Bank statements. At least 3 months' worth. You can use platforms like CashDeck, Illion, or Open Banking. These are great for validating transactions, balances, and ownership. They help back up your assumptions, and trust me, it's worth it to get a clear understanding. Rates notices, if they already own property. You want to confirm ownership, the property address, and the payment history. I've seen it happen too many times where clients think they own the property jointly, but it's only one party on the title. Platforms like RP Data are helpful with this info. And property reports. It helps you gauge property values for any potential security properties. It'll give you a rough idea where the LVR might sit. You can always do the valuation once you know which lender you're going with, but this early report gives you a ballpark figure. And why does all this matter? If you're not collecting these documents or data points up front, you're essentially making assumptions. And we all know that assumptions can be dangerous, not to mention time-consuming later in the process. You're a credit analyst, not a salesperson. The more you know about the client and their situation, the less time you'll waste later on with unnecessary back and forth. That's all for this week's Humpday Helper. Having this core information at the start of your process, whether it's ID, credit checks, or bank statements, will save you unnecessary delays and ensure you can provide accurate recommendations. And don't forget, knowing your borrower upfront means fewer headaches down the track. Thanks for tuning in to today's episode. If you've got any questions or tips of your own that could help our community, I'd love to hear from you. Want to be a guest on the show and share your insights? Drop me a message on LinkedIn or shoot me an email at rob@mbesaustralia.com.au. This is your chance to be featured and share your process tips with our listeners. If you're enjoying the podcast, don't forget to leave a review on Apple Podcasts or Podchaser, or hit that follow button on Spotify so you never miss an episode. Reviews help others find the show, and it's a great way to keep the conversation going. Welcome back to the Reviews Wrap-Up. This week, I'll take a look at outcomes from loan reviews completed during the week ending the 5th of December 2025. We're kicking off the final month of the year, and it's been a pretty good start. This week alone, we delivered $8,100 in interest savings for clients and uncovered a new internal refinance opportunity worth $600,000. Not bad at all, especially considering we only had 5 reviews that actually resulted in a rate reduction. Sometimes it's quality, not quantity, and this week's numbers definitely prove that. And because the countdown is officially on, with only 3 weeks until Christmas, we're still working away behind the scenes, trying to deliver a bit of festive cheer where we can. One client in particular, a First Mac borrower, definitely got an early Christmas present. Now, we reviewed their loan last year and didn't get any movement. Their LVR was sitting at 86% at the time, so we also had the broker reach out and explore some alternatives, but nothing progressed, which usually means the timing just wasn't right for the client. Fast forward to this year, and things look very different. We managed to secure a full 1% reduction for them, which translated into $5,300 in annual interest savings. Whether that's due to a lower LVR or First Mac suddenly finding some generosity in their heart, who knows? Either way, the client was thrilled, and that's what counts. We also had a solid result for an ANZ customer with reductions of 0.13% and 0.21% across a couple of loans. Combined, that added up to $1,800 in savings, and a Macquarie client picked up a 0.1% reduction on a larger facility, which shaved just over $1,000 off their annual interest bill. Macquarie quietly going about doing their bit this week. And then there's CBA, our unintentional returning character in Scrooge of the Week segment. A 0.01% reduction on a $600,000 loan? Barely enough to buy a coffee per month, let alone make a dent in interest. But that tiny movement sparked a much bigger conversation because the client was quick to say they wanted to talk to their broker about exploring other options. So that little reduction might end up leading to a refinance anyway. All up, a good start to December, strong savings, a couple of meaningful wins for clients, and momentum rolling into the end of the year. Thanks for listening to Your Broker Admin. Drop a rating on Apple Podcasts, throw a review up on Podchaser, or simply leave a comment on Spotify. It helps others find the show. You can also connect with me on LinkedIn to keep the conversation going or share your own process gems. I'm Rob Cummings. And this has been your broker admin for those who like their process neat.